Months of volatility culminated in a volatility explosion in the month of March. Global confidence in Chinese shares in particular at its weakest since the 2008 financial crisis. The panic selling earlier in the month, however, quickly turned into panic buying after comments from the Chinese government. Find out how warrants in Singapore tracking Chinese shares listed in Hong Kong performed in the month of March, and how you can use them to trade short-term swings of either direction. Hi, I'm Jamie from Macquarie Warrants, and I'm here to share with you some highlights of the market action last month and how you could have used warrants to capture some of these moves. The year-long sell-off in Chinese shares culminated in the most brutal panic selling since 2008 in the month of March, which took many shares to multi-year lows. Many shares such as Tencent, Meituan, Alibaba, JD.com, etc. had crashed 20 to 40% by the second week of March. However, what had seemed like a bottomless rout quickly turned into the quickest two-day rebound after the Chinese government intervened by vowing to ensure stability in the capital markets, support overseas Chinese stock listings, and resolve both risk in the property sector as well as its crackdown on Chinese tech firms. The rebound in some names was so swift that it led the stocks to be positive for the month. Some of these stocks include Alibaba, which finished 7.6% higher for the month after rebounding 57% in the last 2 weeks of March to pay its 32% loss. Macquarie's Alibaba call warrant, 9BXW, was up 47% in the month of March, while the put warrant YQOW was down 20%. However, not all stocks were able to overcome their losses. Put warrants over the Chinese stocks that finished in the red for the month soared between 16 to 800%, while their call warrants were down between 32% to 68%. The gains on the put warrants would have helped offset some of the losses for existing shareholders of these Chinese shares. You would notice that the warrants moved between 2 to 50 times more than the underlying. This is due to the gearing effect of warrants. The bigger the underlying moves, the more magnified will be the warrants move. How much gearing each warrant provides depends on its effective gearing level, and that can be found at our website, warrants.com.sg. Investors should, however, note that gearing works both ways. For example, you would have noticed how investors of call warrants over the Chinese names that fell also experienced magnified losses in the warrants. Although these losses are kept at the initial investment capital they paid upfront for the warrants. Looking ahead, while the violent moves of March have eased towards the end of the month, any updates on the Ukraine-Russian war can potentially send markets into another tailspin or rocketing. Investors who wish to take advantage of short-term volatility in either direction can visit us at warrants.com.sg today to find the list of tradable warrants. For further details on trading warrants, and to find out if you're qualified to trade warrants, click on the link in the description or feel free to contact us at our warrant hotline. Lastly, don't miss out on the next video and exciting warrant news by scanning the QR codes and subscribing to our channels on YouTube, Telegram, and Facebook.